Hi guys, Oleg Chernikovsky here, broker group leader for HME Group, Remax West. I wanted to talk to you about what's happening in the market. A lot of my clients have been calling me. I've been stopped on the street, and basically when I talk to people, they're telling me, Oleg, what's going on in this market? Should we be selling? Should we be worried? What should we be doing? Because there's a lot of stuff going on in the news, and the news sounds like emotional. It sounds scary. What's your reaction when you hear that, oh, on July 13th, the Bank of Canada has increased the overnight rate by a whopping 100 points, which is the highest increase since 1998, to 2.5%. And as a result of that, you hear the next headline. The investors are exiting the market due to the high interest rates. Really? Is the interest rate going to force the investor to exit? Is that the only factor? I wonder. The next thing we hear is that more than 40% of young Canadians believe that they have to give up on their dream of owning a home because now the rates have gone up and the home prices are totally unaffordable, and now they're going to be renting for the rest of their life. Really? Is the interest rate increase actually going to cause that? Or there's other solutions besides that? But let's put it in perspective. What does this headline truly mean? Or what does it mean when you get a report from RBC saying, oh, due to the high interest rates and to the factors, we project that the sales are going to drop by 42%, which is the highest drop since 2008 or 2009, and that they're projecting an additional 12% decline in pricing, basically in the next year. Interesting. Is price decreases going to cause that? And how are we deriving that 12% or 42%? It's just numbers. Does it not make you stop and react? So my question is this. What does all this mean to you as a buyer? What does it really mean to you as an investor or to a seller? And what should you be doing? That's the part I'd love to talk to you about. Because here's a couple of things. Real estate is not about just interest rates. It's not about the headlines. That's emotions. That's people reacting. And it causes a lot of different stir. But what real estate is about economic fundamentals. The GDP, gross domestic product, growth or decline. The employment, which has been, right now we have the lowest we've ever had in a long time. The population growth, which we actually had a high population growth, and our government is projecting more people coming in. And by the way, with what's happening between Russia and Ukraine, is not going to bring more refugees or people into Canada. Don't they require more housing and demand for things? Does that not support our economy? Interesting. So is it just about the interest rate? Or is it about the fundamentals? It is also about factors that affect those fundamentals or may influence them. For instance, COVID, did it not affect us? Absolutely. It created a decline in GDP, then it created a growth in GDP. It helped a lot of people put away some money and created certain wealth, and it did create challenges. Due to COVID, we had very low interest rates to stimulate the economy, which caused the real estate market to jump up and boom. But now we have a higher interest rates, which we're saying, oh, the market is going to crash or it's going to slow down. Really? Is that the only thing? Right? So I think the idea is this. We are also dealing with inflation. So I think the idea that comes up, and how do these factors influence? Because here's the thing, when they influence, they do two things. They create a challenge and they create an opportunity. Our job is to understand how to deal with the challenge, because there's always a solution, and how to take advantage of the opportunities. So let's talk about the interest rates, how they affect you as a buyer, and RBC's projection about drop in sales and pricing. So here's the thing. If you're a buyer and reacting to the increase in interest rates, I want you to take a note of one thing that the newspaper never reported. While the Bank of Canada increased the overnight rate, what was interesting is this. In July, all major banks have actually lowered their 5-year lending rate as to compare to the June rate. So in fact, the affordability actually went up, but nobody ever heard about it, did they? Wow. And then, but let's assume that the interest rate actually went up by 1%. So let's talk about that. What does that truly mean to you, a buyer? Well, first of all, we have to remember that in Canada, in order to get a mortgage, our banks will only give us a mortgage between 39 to 44% of our debt to our income ratio. So in other words, if we take all your total debt, we're still left with 56% of our income for disposable decisions. So technically speaking, if my operating cost goes up by $500 on a $750,000 mortgage, that means I'm making over $100,000 a year. Is $500 going to stop me from, reaching my dream of owning a home? Really? Maybe I'll go to a restaurant a little bit less. Maybe we'll buy, or we'll go maybe less on one trip, but we're still able to buy the home. Or we would buy a home slightly cheaper, maybe a little bit smaller, but we can still make it a reality. So do not panic. There are many different solutions for buying a home. And by the way, there might have been people that got over leveraged that are now affected by the rates, that pre-bought, pre-construction and other points. Well, guess what? They might be stuck, and now they need to sell, and they might need to fire sell. Doesn't that create opportunities for saving some money? If you want to find out more, check our other video or give us a call. We'll be able to show you many different solutions. If you're an investor and the interest rate went up, yes, your carrying costs go up. But here's the thing. Look around you. Has the rents not gone up? Isn't there a shortage of supply? We hear it every day. So the rent rates are going up. I just listed 3 of our properties that I manage that just became vacant. And not only did we increase the rates from before, but what was interesting is this. We actually raised them by an extra $250 above and beyond what we actually expected. And we rented it within a week to great people. So does that not make it much more affordable? We buy investments for cash flow, not for just interest rate. So we should not be panicking. You should be looking at fundamentals. So if you have any questions, look at our videos on investment or give my team a call and we'll show you why investing in real estate is still the safest vehicle to get you to where you want to go, providing you understand the rules and you're making sound decisions based on economic fundamentals. You do the research, you know the rules of the game, you make the right decisions, you make the right investment, you will limit your losses, and you'll always increase your returns. So now the question is, if you're a seller, should I be panicking? Should I be selling now? Because what if my value goes down? Well, here's the thing. The decision to sell or buy should not be driven by the interest rate. It should be driven by your lifestyle and your needs. So here's the part. Yes, if you were a seller and if you would have listened to me and my team, we told everybody, guys, January, February, and even March, we said we have a unique opportunity. This low inventory, we were able to not just sell above a high price, but we were able to manipulate and get offers where it was 150 over market. Anybody can sell over asking, but if you were selling over market by $100,000, $200,000, why? Because there were people panicking, and we knew how to leverage that. But does that mean that the market price actually went up for every other neighbor on the street? No, it just means for that seller, we took advantage of the right opportunity while there was no inventory. The next day, the next house went back to market price. And the process started again. And you hope to find a buyer that was panicking, might overpay. But there's no guarantees. So the prices didn't drop by 20%. They got adjusted. So when we hear the news that, oh, a lot of the sellers are taking properties off the market, well, it's not because the price has dropped and they can't sell it. Some of them are taking it off the market because the agents still haven't adjusted to the new trends and they're still trying to do multiple offers. So they're setting up these underpriced, crazy prices by $200,000, $300,000, $400,000, $500,000, $600,000, expecting that they're going to get multiple offers. They're not coming in. So they're removing it from the market and putting it back. Or they may be doing the opposite. They haven't educated the seller or talked to them about the real price. So they're saying, oh, my neighbor sold for 1.5 million. My house is worth that much. Well, guess what? The guy that bought your neighbor's house overpaid by about $250,000 because there was absolutely nothing to choose from when they were in a panic. And the true value of the home is 1.25. So if you list it at 1.5, you would be sitting and nothing would be happening. But if your agent has done the proper job of educating, then technically there's no reason to come off. And by the other part, yes, before we would sell things in a day. Now, if it's properly priced, it may sell within 10 days, 5 days. But normally we're back to the regular market, which is in about a 45-day period. So it's about understanding the true value of your home and is it the right time to sell. But here's the thing, just because your price you feel has come down, do not worry, because here's the good news. When you sold, you had to go somewhere else. And the problem in January, February, when they got those high, crazy prices for our clients, they had to go somewhere. So we usually told them either we're going to rent because we expected the prices to drop or to adjust and have more inventory in May or June, which is exactly what has happened. Or basically they would be forced to buy at a higher price. So was there much savings? So right now, yes, you're selling for less, but now you're also going to be buying for less and you have more to choose from so you can find the right property. So do not disperse. The interest rates actually created more opportunities for you. Again, there's many things we can talk about the market. Tune into our other videos because this is probably, I don't want to overload you with different stuff, but if you have specific questions, because real estate is not about general, it's not about averages, it's about you, your needs, your challenges, and your objectives. And the answers and the solution should be geared to each individual person. The principles are specific, but the decisions and the solutions should be individual. So give us a call, ask your questions. We'll be happy to give you some different solutions. Talk to you in the future and look forward to seeing you on our other channels. Please like us, please tag other people, because the last thing we want to do is people buying or reacting or selling in a frenzy. It's not about emotions, it's about making sound decisions. All the best.